Good morning, Sense of Things crowd. It's Jeff and Ron here once again with another Sense of Things for this week. And it is a fun day today because it is Leap Day. It recurs once every 4 years. Ron, how you doing, bud?
Good, good. It's funny. I don't know if it's George Harrison or somebody out there. I remember years and years ago, he goes, "Yeah, I'm only 12 years old." He was really 48. He
Yeah,
goes, I've only had 12 actual birthdays."
12 real actual birthdays. Yeah, that's I was reading something this morning. The guy who's of all things, the Florida Times, which seems to be like my Florida man research place. It's what he was saying. He's like, yeah, he goes, I'm having my 15th birthday today. I can't even drive yet at this point.
Yeah, my grandfather died on leap year. So,
Really?
it's just a little reminder.
Yeah. Let's kick it off here a little bit with just that very thing. Happy leap year. We have some stars in, or some famous people that have had birthdays today. My favorite actor, pretty much of all time, Dennis Farina,
Yeah.
just absolutely the funniest sense of humor. Tony Robbins, birthday today. So he's probably, I would say, the most famous of them. Dinah Shore, and then Ja Rule, the rapper. And there's a ton of other people, but honestly, I was like, I don't even know them. And apparently, we don't have a whole lot of newer people that are famous that have birthdays on the 29th here.
No, no.
Yeah. Well, one of the things I saw this week, and it's interesting. We've had this conversation going on about the really what's been going on with the consumer and everything else. And everything we've seen was okay, no matter what was going on, whether it was leading indicators or anything along those lines, everything seemed to be trending down. The consumer was on board. Interestingly enough, one of the things that I started seeing this week in the economic data, and this is all things that occurred during this week on this week's economic releases. And these are all things that are either by briefing.com measured as medium to high effects on the markets.
Right.
So new home sales down, which was expected to be up. Durable goods orders down really significantly from previous. Consumer confidence starting to wane off a little bit. Initial claims were higher and continuing claims were higher this week. So all of these things are all things that I see affecting the consumer. What's your thoughts, Ron?
Look, we've been seeing a steady downtrend for almost 24 months.
Yeah.
We're coming up to 24 months when the 2 and the 10 yield curve inverted. And that's one
Mm-hmm.
of the longest times that we've been continuously inverted.
Yeah.
And we've been saying this for a while, the echo chamber thing, being dogmatic, all that good stuff. These things will continue to trend down, level off, trend down until something breaks.
Yeah.
What that is, don't know. What the timeline is, don't know. But it is ominous. And I think it's
Mm-hmm.
interesting, and I know you and I chuckle about this, whether we're on our pod or not, that I love it when you get these permabulls coming out on TV just going, ignore the data, right? Profits are strong. Profits aren't strong broad based, right?
Yeah.
It's very myopically focused on a couple of key companies and sectors. So if it's going to continue to trend down, how do you not look at that? And I just think this is a continuing theme, and we could be talking about this every week to ad nauseum, but I just think it's amazing. We could look at all this, we see how bad things have continued to go, but until there's a catalyst,
Mm-hmm.
animal spirits are high and get your Gatsby on.
Yeah. And it was interesting as you talk about corporate profits. I guess the only bright spot in this whole thing was personal income was up 1% versus an estimate of 0.6%.
Right.
So
That's
for the
part of inflation
consumer,
too.
yeah, consumer, that's good. For the employer, that's not a good sign. And I will tell you, I just had to hire somebody for one of my other businesses and ended up having to pay about 20% more to get a decent candidate than I had for my previous employee that's leaving. So it's, yeah, it's great that personal income is up, but the problem is that just pushes inflation higher and it pushes everything higher when it comes to companies.
Yeah. Listen, we talked about this last week. A Big Mac meal is $12 to $15, depending on what part of the United States that you're in.
Yeah.
The average half decent car is going to be 40, 50 plus $1,000
Yeah.
for a half decent car. This is the new normal with that. So McDonald's is no longer a quick, simple bargain for your kids or for yourself. Walmart starts talking about, I don't know how they know this, that their average customer that's coming in their store that makes $100,000 has been trending up for years now. So what is that telling you about the more well-off families being able to go into Walmart? Walmart has
Yeah.
a lot of good stuff. It's not garbage. It's not Goodwill, for crying out loud. So
Mm-hmm.
I don't even know why they got a bad rap in that area.
Yeah.
Things are going up and just you got to get used to it.
I would say the other side of the coin too is I'm seeing, or I've heard the trend, even with the dollar stores, people, higher income people shopping in the dollar stores for, I remember hearing this during the beginning of school season this year. They're shopping there versus going to Target or someplace else for school supplies because
Right.
it's basically the same thing at that point. Last thing I wanted to cover market wise, this is something I watch on a daily basis. Part of my morning routine is to go to investors.com and then briefing.com. Investors.com, this popped up this week. The stock market exposure indicator went from 80 to 100% stock market exposure, backwards to 60 to 80%. And their reason for that is we've had such a massive upturn in the S&P 500. And they track, basically they use the S&P, Dow, and NASDAQ. And there's been such a massive run up in all of them that their recommendation or their read is to start pulling back a little bit on the stock exposure in portfolios, which I agree 100%.
Yeah, and it's interesting. When I look at that chart, it's the headline. I'd like to know how they know that. What I mean is, if people are taking profits or taking money off the table, why hasn't there been some type of a precipitous pullback or even a 3 to 5% pullback?
Yeah.
So what is that saying? They're still holding on to the top 7 to 10 stocks?
Yeah, theirs is typically predictive of their recommendation of exposure. So it's not because the market is starting to pull back. It's just because of things are stretching beyond the reasonable valuations and things like that. So they'll start to pull back a little bit. I will tell you, they've been pretty much balls on accurate in the 30 years I've followed them. And now they've revised this. It actually used to be, I think it was just 3 phases. So it was 80 to 100. Then it was a middle one, which was maybe like 40%, and then 0 to 20 when we were in like a full on correction.
Right.
And they've just recently revised this to where they've got a little bit more. It's a little bit more, okay, make some adjustments here, pull some cash back just in case we have a pullback or something like that. But I will tell you, it is something I keep an eye on all the time. And it's it's one of the factors that we use with our predictive AI. It's one of the factors that we plug into our predictive AI on our portfolio management. So just saying, yeah.
If you're taking money off the table, 2.5, 3 years ago, you had no place to put it.
No.
Today, the Treasury, and I got to check the 1 year, but I know the 1 to 6 month are still yielding over 5% annually.
Yeah, money markets are still yielding. Yeah. I think the Schwab money market that I've got a couple clients in that had cash, I think it's still above 5. It's not keeping up with inflation, but it's right there at inflation at that point, actually a little bit higher than inflation is even.
Yeah. So like I said, a lot of these things are interesting between economic data, sentiment data, all that good stuff. The sentiment data is surveys and people are looking at the headline, but I'd like to know, well, hold on a second. What socioeconomic classes? Who are you asking about spending habits and things like that? That's another conversation.
Oh, yeah.
But when you're looking at all this data and it's trending down, and in a presidential election year, we don't know what's being manipulated. I don't care which president, which party's in the White House or not. I know every presidential election year, the other side always accuses the incumbent side of, oh, why aren't we getting all the data? Or that this
Yeah.
can't be all the data. Even if it is all the data, they're still making the accusation to put doubt in people's minds. And this is just a game that's being played, and hopefully the average American out there is a bit smarter than that.
My favorite is watching one of the things I pay really good attention to on economic data, and this is one of the things I love about briefing.com, is they not only every time they post like a number, they also post, okay, what was the previous number and what was the revision? So you can see that. And it's amazing to me that really probably about the last 6 to 7 years, what I've seen is boom, they post this number that everybody's, oh my God, it's great. But then you watch about a month later and they're adjusting that number massively back. And it's just that whole, either you suck at measuring it or you're trying to manipulate stuff. And
How about both?
yeah, I think it's a little bit of both. I am amazed at the ability of the government to be just absolutely terrible at tracking these numbers, but it hits the headline. That's the important number for them. And then they adjust it back. And that doesn't ever seem to get reported that much.
In today's day and age, I could have said this 20 years ago.
Yeah.
In this day and age, with technology and the expeditious nature that we can get and analyze data,
yeah,
there should be no excuse. Revisions in the first year, okay, I get it. 3, 5, 10 years down the road, no, I'm sorry. Yeah. Data is final. And here's my other fun thing. The IRS requires us to file our taxes every single year. Nobody's filing January 2nd, right?
No.
You still got to get your bank statements and your credit card statements. There's other reconciliation.
If you own businesses, you're not going to get anything until March.
Yeah, people don't close their books for last month, typically to the middle to the end of the next month. And people don't close out their year typically for, a month or two. And every business is different because of how the data comes in. Why can't we expect the same consideration from the government and the agencies to be able to present data in a timely fashion? Makes no sense to me.
Yeah. No.
And if they are going to make a revision, I understand like fractional percentage points off. Whole percentage points off? I'm so sorry.
The ability of big data, it's okay. It's time for you guys to hire Amazon or somebody that does big data to do this stuff a hell of a lot.
There's no excuse, Jeff. There's no excuse.
I know there isn't. Yeah. We spend ridiculous amounts of money on all of this, and we're getting probably the worst data science I've ever seen.
I should say it's going to get better, but if the political discourse continues, it's basically the same BS moving forward.
Yep. Yeah, like I said, I don't necessarily think they want to know. If they knew pretty much right on the money, then they'd have to actually do something about it at that point, and they're just not.
I agree. All
right, what do you got on your side there?
I want to flip over. I got the pop culture. Okay. So we'll go over to there. And, through popular demand of last week and the week before of bad business decisions and bad products, we're just going to keep riding this for bad products for this podcast and next. So I know last week we did one where a Raid can and a drink look very similar. Wouldn't you know, this week, Radiator Coolant looks like an energy drink to me. I'm just hoping in convenience stores and gas stations that this is definitely in a separate refrigerator or a different end cap in a store.
The funny part is, and it's using like a normal pull top can thing, like you would for a drink.
Yes, this is damn scary. And I don't know much about cars, but I certainly I would get confused.
Yeah.
All right. Again, who are designing these slides? Adults beware. Look, there's already enough liability with kids' playgrounds. You got to institute this for potential bodily harm. And some parents that didn't get enough sleep where the kids are coaxing them, we're going to get on this thing. Hopefully, forget about going feet first, going head first, maybe.
I don't know which end I would rather take it in, but yeah.
And then again, getting on the bad designs and staying with kids' playgrounds. Who approved this design for a playground? slide. I really want to know.
Okay.
Yeah, just saying.
Wow.
And if you take a look at this, at the structure support, this is the way it was designed. Nobody ended up doing this on their own.
No, yeah.
All right.
Wow.
Anyway, I was never a big Pikachu person. I know the
Mm.
kids were back in the day. It was a big thing. I think this is a bad product design. I don't know what you think. I,
Okay. Wow.
I don't know.
It took me a second to figure it out. Oh, yeah. Wow. Okay.
Why wouldn't this go like back of the head in so it's staring at you? Maybe you put it in its mouth
Or
or
belly or
its
something
arm
like
or
that. But
chest
yeah.
or I don't know. All right.
Wow.
If it only serves one, why is this ideal for sharing? Please help me out. Did anybody sign off on this before they printed up a few thousand or whatever it may have been?
Oh, Lord.
All right, so that's my pop culture for the week. A good way to end it.
Yeah, I love it. Love it. Love it. Folks, thanks for joining us for this week. This was a little bit of a shorter show, but I think it was mainly dominated by what I feel like is a time where we're living through a time where I think some of the cracks are starting to get a little bit more cracky than they have been, so to speak. And I think we need to get to the point where we're a little bit more protective of our money. So I'd encourage y'all to start thinking about that, paying a little bit more attention now, because we don't know what's coming around the corner. And once again, it's an election year, so things could be just completely crazy. So thanks for joining us.
Get your popcorn out.
Yeah, no kidding. It's just going to get crazier here. And I think after next week, after Super Tuesday, it's pretty much going to determine who the battle of the network stars is going to be here. Thanks for joining us. As always, make sure that you hit that upvote button. Let us know that you're out there, and subscribe to the channel so you get these updates every single time. So thanks for joining us, and we'll see you back here the very next time.